All right, if you're a trader, you've definitely been there. Staring at a chart that looks like a total mess, right? Spikes everywhere, sudden drops. It's just noise. Well, today we're talking about a tool designed to fix exactly that. Heikin Ashi. It's super popular for cutting through the chaos, but a lot of people get it wrong. So let's break it down and see how it can seriously clean up your trend analysis.
Okay, boom. This right here is the whole story in one picture. On the left, you've got your standard noisy candlestick chart, the kind that makes you want to second guess everything. But on the right, that is the exact same price data just shown with Heikin Ashi candles. I mean, look at that difference. It's so much smoother, so much clearer. And that right there is the problem Heikin Ashi was born to solve.
So here's our game plan. We're going to start with why we even need to cut through market noise. Then we'll get into the secret sauce, that average bar calculation. After that, we'll learn how to actually read these things, put it all together in a simple strategy, and wrap up with the really important part, what this tool can't do. Let's get to it.
So, let's kick things off with a feeling every trader knows. That anxiety when the market is just all over the place. You see a fake out, a sudden reversal, and before you know it, you're making impulsive trades and doubting your whole strategy. It's exhausting. Honestly, trading is as much a psychological battle as it is an analytical one.
And believe it or not, this is not a new problem. Not at all. We're talking about an insight from way back in the 1700s from this guy, Munehisa Homa, basically the grandfather of technical analysis. He figured out that at the end of the day, markets are just driven by fear and greed. And the whole idea behind Heikin Ashi comes from that core truth, creating a tool to help us manage our own psychology by filtering out some of that emotional noise.
Okay, so how does it pull off this magic trick of smoothing things out? Well, it's all in the math. It's a totally different way of calculating and drawing each candle on the chart. Let's jump in and see what's under the hood. So the name itself gives the game away. Heikin Ashi. It literally means average bar in Japanese. And that's the key takeaway. A normal candlestick just shows you the raw open, high, low, and close. Simple. But a Heikin Ashi candle is different. It's an average that mashes together data from the current bar and the one right before it.
Okay, so how does it actually do this? You don't need to be a math whiz, but here's the basic idea. The open of a new Heikin Ashi candle isn't the real market open. Instead, it starts from the middle of the last Heikin Ashi candle. And the close? That's an average of everything that happened in the current bar. See how it's always looking back a little? That's the secret sauce. That's what connects each candle to the next and creates that super smooth flowing look.
All right, enough theory. We know what it is, we know how it's made. Now for the fun part. How do we actually read the darn things? Because they're built differently, they tell a totally different story. A story about trend strength that's way easier to understand.
So, signal number one, a strong uptrend. What you're looking for is a series of nice long green candles. But here's the clincher, the thing you absolutely have to look for. No lower wicks. See that? No little tails on the bottom? When you see that, it's screaming at you that the buyers are in complete control. The price didn't even think about dipping down. That's pure, consistent buying pressure.
And on the flip side, you've got your strong downtrend. It's the mirror image. You're looking for a chain of long, solid red candles. And, you guessed it, this time they have no upper wicks, no wicks on top. That's your signal that the sellers are running the show, and the price couldn't even poke its head up. It's just powerful, persistent selling.
But what about when the party might be ending? Well, you'll start to see these little guys, candles with small bodies and wicks on both sides. They look a lot like dojis. This is the market hitting the brakes. It's a sign of total indecision. The buyers and sellers are in a standoff, and it's a huge clue that the trend is running out of steam and might be about to turn around.
Okay, so we can read the candles. Now let's try to put it all together into an actual strategy. See, Heikin Ashi is great on its own, but it becomes a real powerhouse when you pair it up with another indicator, like a simple moving average, to confirm what you're seeing.
All right, here's a super simple 3-step recipe. Step 1, we need a trend filter. We'll use a 50-period moving average. The rule is simple. If price is above the line, we're only thinking about buying. If it's below, we're only thinking about selling. Step 2, the entry. In our uptrend, we wait for the first Heikin Ashi candle to flip green. In a downtrend, we wait for it to flip red. And step 3, the exit. This is the easiest part. We get out of the trade as soon as the candle color flips back against us. That's it.
So let's see this in action. Check out this Bitcoin chart. Price is cruising above our 50-period moving average, so we're in buy mode. It pulls back a little, then boom, there's our first solid green Heikin Ashi candle. That's our trigger to get in. Now we just sit back and ride the wave. Green candle after green candle, we're just letting our profits run. And our exit? It's right there. The moment that first red candle shows up, we're out. It's a disciplined way to capture the meat of a move.
Now, I know this all sounds amazing, maybe even a little too good to be true, and that's why we need a serious reality check right now. Heikin Ashi is an awesome tool, but it is not a crystal ball. It has some major drawbacks, and if you don't understand them, you could get into trouble. So let's talk about the fine print.
So here's the breakdown. The good and the bad. On the pro side, you get what we've been talking about, the smooth charts, really clear trends, and it seriously helps you keep your emotions in check. But the cons? Man, these are important. It lags behind the actual price. That's a big one. It can hide things like price gaps, and this one's a killer. It can make it really, really tough to know exactly where to put your stop loss. Okay, everybody, listen up. If you forget everything else I've said, please remember this one thing. The price you see on a Heikin Ashi chart is not the real price. I'll say it again. It's not real. It's an average. The actual price you can buy or sell at might be way different. This is so important. You cannot, I repeat, cannot place your orders based on the Heikin Ashi chart. You always have to look at a regular chart for your actual entries and stop losses. Got it? Good.
And really, this all comes back to where we started, psychology. That's what this tool is all about. It's a discipline machine. It helps you be patient and wait for the trend. It gives you the confidence to hold on during those scary little pullbacks, and it helps you avoid that classic mistake of jumping in at the top. It just makes the market story a whole lot easier to read, which is exactly what our old friend Munehisa Homa was trying to do all those years ago.
So there you have it, a deep dive into Heikin Ashi, a fantastic way to tune out the noise and focus on the trend. But now, I want to hear from you. Are you using these candles in your own trading? Do you love them? Do you hate them? Drop a comment below and tell me how it's affecting your decisions. I'm really curious to hear your stories.